Hi and welcome back to ABG Investor Days. My name is Simon Jönsson and I'm an equity analyst here at ABG covering IT and gaming. Next up we have Erik Roman, CEO of Awardit. With that said, I will leave the floor to you, Erik.
Thank you very much. Hi, I'm Erik Roman. I'm the CEO of Awardit. And I have been the CEO of Awardit since 7th of March this year, so a couple of months. And my background is primarily in online retail and services. I have been with EssilorLuxottica, Smarta and Betsson, to name a few. And this is my first full quarter with the business, having just reported Q1. And I will start by talking a little bit about Awardit as a company. And we are a market leader in the Nordics in loyalty programs and gift cards, where we offer a full ecosystem within these two areas to our customers to improve sales, retention, customer loyalty, and profitability. And we work with everything from strategic advising around loyalty programs and gift cards, all the way to setting up the programs, designing the programs for our customers, enabling the programs through giving access to our SaaS-based platform, and also fulfilling the programs with products and services and customer support. So providing everything within the spectrum to make sure that our customers can run successful loyalty programs and gift card programs. And the business was founded in 1999. We went public in December 2017 and has since then made 10 acquisitions where we have enabled this full scope of services within loyalty and gift card programs. Today we are 135 employees and we have offices in Stockholm, where our headquarters are, in Gothenburg, Copenhagen and Hamburg. And I will talk a bit more about our different business areas later on in the presentation. But today, as I said, we are the largest company within this segment in the Nordics. And we believe that provided strong organic growth this year, we could be able to reach 1 billion revenue SEK this year. So we have a pro forma revenue of a bit less, obviously, but we see strong growth coming in from the first quarter and also continuing beginning of second quarter. So our ambitious target is to be a 1 billion revenue company this year. And our vision, a bit more long term, is to become one of the absolute leaders in Europe within this segment. And we believe that we have a strength in building strong customer relationships, loyalty, and also improve our customers' profitability and sales through different kind of programs. And we can see that we have a very fragmented European market where we can provide these services moving forward. So we believe that we have a strong position today in the Nordics that we can expand further in Europe. We have a SaaS toolbox that is built together by our acquisitions that enable us to work full scale within these segments. And that's a very strong platform that we can continue to enable and drive new business on moving forward. Today we have 250 plus programs where we reach more than 15 million customers, primarily in the Nordics, with our programs. And we have historically and continue to see strong organic growth in our programs, and also a rising profitability from adding scale to our programs and adding different parts of the ecosystems onto the programs. And as I mentioned, we have done 10 acquisitions since we made our IPO in 2017. And just talking a little bit about our markets that we operate on. Within the gift cards market, we see a strong growth across the world. And that's driven by, of course, the rise in mobile and mobile adoption across the world, digital solutions for mobile, and also a move from using physical gift cards to digital redemption codes, awards, and gift cards. So we see a continued strong growth in gift cards as a market and in different kind of use cases as well, where gift cards a couple of years ago was something that you handed out as a physical coupon, and today it's more about how can you put out digital currencies that enable transactions for your customers. So strong growth in global gift card market moving forward, and we see that also here in Europe and in the Nordics. Also for loyalty programs, we see a strong growth, driven by a need for customers to work more with their loyalty and their retention activities with their customers, where even in tough times, it's very important, of course, to be a strong provider to your customer, where you can add value through loyalty programs. You don't need to work as much with discounts and lower pricing, but rather add other benefits to your customer base. So that is also a growth segment that we're operating in. And as I mentioned, we have done 10 different IPOs, 10 different acquisitions since the IPO in December 2017. And to point out a few, we made an acquisition of Crossroads in November 2018, and that enabled more of a fulfillment side to Awardit's loyalty programs, where we now work with both our own warehouses with products, shipping to consumers, and also cross-docking solutions. But the combination of Crossroads and what we had before in Awardit made this possible. We acquired Retain24 in late 2019, and that is enabling the cards processing side of the business, and our first major step into the gift cards segment. And that is where we sell a lot of our retail customers' cards and also give access to the processing of cards in a full ecosystem towards our clients. In April 21, we acquired MBXP, which is also a gift cards business, and where we also have another side of our gift cards business in terms of branded products, such as iTunes gift cards, and also private label products, such as our Den Beste Gave gift cards with hotel experiences and different kind of gifts that you can give away and redeem for experiences. And also, just to mention Premie Direct, end of last year, which is our first acquisition outside of Nordics, and gives access to the German market, and is more of a fulfillment partner in loyalty programs on the German market. So basically, building ecosystems within the Nordics, and now looking at how to continue to build this outside of the Nordics. The strategy in how we approach our customers is that we actually offer something that can enable loyalty and customer satisfaction amongst consumers, businesses, resellers, and employees. So we have a broad spectrum of products in our portfolio for our customers. And I will talk a bit more about the business model, how that works later on as well. But mainly, our customers are looking to achieve a greater share of wallet from their customers. You know that customer, on average, has a spend of X SEK every year for certain products. Of course, you want to ensure that the customer is using as much of that in your shop, in your retail chain. So adding a loyalty aspect to a customer program, of course, enables that without giving discounts, as I mentioned before. Also, customers usually are looking to increase customer lifetime, obviously, and reduce churn. So rather than spending more and more money on acquiring new business, we are actually making sure that you have a very healthy business model of the existing customers. And also, we are helping customers to establish more responsive, better communication to the customers in the loyalty programs, where we actually help our customers to define what kind of communication to run. We have a reason to communicate to the customers in the loyalty programs. So that's also something, a service that we provide to our customers. And we also have, within our ecosystems, the possibility to add other value-added services to the loyalty programs, where you, for example, not only can earn point through the loyalty program owner, but you could also earn points from partners that are in the network that we have. So as an example, if you are in a customer club buying a certain kind of product, you can also get points from fueling your car at a gas chain retail network for that loyalty program. So we offer a broad range of partnerships that we can add on to the loyalty programs that our customers can access. And also we have programs to stimulate staff and employees using the same kind of levers and mechanisms. So moving on to talk about, how the business model works. We divide our model into primarily loyalty programs and gift cards, as I mentioned. We also have the partnership model that I just described. And in loyalty, we have B2B programs and B2C programs. In B2B, the end user of the program is a business or a business owner. Our customer is someone that provides the program to a business. In B2C, our customer provides the program to an end consumer. And the partnership is where we add on services to these programs. And we have multiple revenue streams within loyalty programs. We have setup fees that we get from setting up the programs. We get monthly fees from working with the programs and access to our platforms. We earn revenues from sale of points within the programs, from selling products within the program in the loyalty marketplace, and also from advice and customer support, etc., that we provide to our customers. In gift cards, we also have the setup fees and monthly fees from our customers, but we also have loading fees where we earn revenue from every card loaded, no matter what sum is loaded onto a gift card. We have different kind of commission models to access our processing platform, which enables all the transactions for gift cards. For our private label products that we own and where we have the brand in our ownership, such as Supergift, we also have breakage for non-redeemed cards that are bought. And also here we provide services and advice to our customers. For the partnership model, we earn commissions when we enable transactions. We earn revenues from selling points within the partnerships, and we also earn from setting up campaigns within the partnerships. And looking at some of the private labels that we have, products that we own ourselves, we have a portfolio of those, and we are looking to also, of course, to add on products to this portfolio moving forward. But I can add Supergift as one good example of a product that we have added on top of what we had before in Retain24. So Supergift is a compounding gift card. You buy one gift card and you can redeem it for several others. But we own the concept of Supergift ourselves, and therefore also we get the breakage for unredeemed Supergift gift cards. Same thing goes for the Beste Gave, which is the experience gift card I mentioned on the Danish market, and City Break. We also have a MasterCard product, Paygo, where we have a preloaded card and a reload card sold mainly through retail today. Historically, we have seen strong organic growth up until 2017 when we made our IPO. After that, we've seen a combination of organic growth where we continue to grow pretty much every year steadily, except for 2020 when we had a setback due to the pandemic. But we also added quite a lot of non-organic growth, of course, through the acquisitions. And the revenue last year was 529, including some late acquisitions in the year where we added actually Premier Direct in December. We also have a strong earnings growth. So you can see a sort of earnings coming down as a percentage while adding some new business areas, but over time growing in all of the businesses that we have added pretty much. In Q1 this year, we saw compared to last year growth of 170% almost, including the acquisitions made last year. Our organic growth, if we exclude MBXP, Inspiration Company, and Premier Direct, that are not organic to us, we had a 40% growth in the business compared to Q1 last year. And we are seeing continued growth in April of more than 30%. And you can also say that Supergift as a product saw a growth of more than 100% in Q1. And we see a continued growth in Q2, which is very good for us because it's a very profitable product. And also we have, as I mentioned, the breakage coming from that 1 year after it's put out on the market if it expires. And also, we actually had a negative impact on the German market in Q1, as we saw lots of movements in the German market within the energy sector, where we had some customers being affected of new market conditions, where they then postponed campaigns onto later in the year. So we had an effect of around 15 million in less revenues than expected from that in Germany in Q1. And on the EBITDA side, we delivered 5.7 million SEK in EBITDA in Q1, which is slightly less than last year. Last year we delivered 6.6 million SEK. And in this, we had some one-off events happening in Q1 this year. We had a pricing error on one of our platforms that happened while migrating technically customers that had a negative impact of 1.4 million SEK. Very unusual for us and will not happen again. Also, we had a customer bad debt loss of 2.5 million SEK in a quite unusual deal being made in 2020 that we now see we will not get back. So we had a write-off of 2.7 million in Q1, which is also very rare to the business. So a negative one-off effect of 4 million. Also, we had, from the loss of revenues in Germany, a negative effect of 1.4 million SEK in the quarter, while we also had a negative effect from MBXP, our new acquisition, which was fully in line with the seasonality of that business, but taking down the results of the quarter by 1.4 million SEK. So basically, looking at if we would adjust for these one-off effects, we would have had an EBITDA of 9.8 million SEK, which is 48% up to Q1 last year. And to me, a very strong side of the business is still the organic business growing by 40%. And also, we see that if we take away the acquisitions and look at the organic business, we also have a growth in gross profit margin, where we had 30% gross profit margin last year in Q1. This year, we had 31.2% on the same organic business. And obviously, we knew that when adding acquisitions to the business, we would take down the gross margin percentage on the business. And if you look at the 3 acquisitions for the quarter, MBXP, Premier Direct, and TIC, they were dilutive to the total gross margin. And they had a gross margin of 24.1% combined for the quarter. And we will see, of course, now also the gross margin of these businesses improving moving forward quarter by quarter, where the seasonality is that in Q1, MBXP is not profitable. In Q2, Q3, they are stable and profitable, and then they are highly profitable and scalable in Q4. So basically, the core business is in good shape, growing, and with strong margins. And we are not at all worried about the MBXP business. And then we are keeping a very close eye on the German business to make sure that is up to the revenue levels that we want as soon as possible. And to summarize, I believe we are very well positioned for continued success with the business. We have integrated around 50% of the TIC volume onto the Awardit platform. So we continue now, obviously, and aim to have everything done in the autumn. Then we have all the tick volumes on the Awardit platform and gain all the synergies from that acquisition. In Prämie Direkt, we have initiated projects to identify procurement savings, where we obviously buy the same kind of products in the Swedish business as in the German business, and can make savings and strengthen margins through combined purchasing. We see a continued strong organic growth, as I mentioned, and we are continuing to work on business-oriented synergies across the group. One example is adding gift cards from our different areas into our loyalty shops to improve the offering in there and strengthen margins. Another one is launching Supergift end of the year in Germany to strengthen the position of Prämie Direkt on the market there. We're also working a lot with business development and seeing how we can establish new kind of partnerships with card linking and open banking systems to enable even broader networks of partners to give value to our loyalty programs. And we continue to see a strong growth of customers coming in, both on the loyalty side, where we add new cases, and we have a list of prospects that are highly interesting, but primarily also on the gift card side, where we continuously add customers in our retail segment and in our branded and private label segments. We are also continuing to look at additional value-creating acquisitions. We have a rather strong cash position, so we believe we are in a good position to continue our journey to find strong combinations to the business that we have, while adding value to the business. And our vision to become one of the absolute leaders in the European market on the full ecosystems of loyalty program solutions and gift card solutions. So, and I believe that we are only in the beginning of this journey. We are strong in the Nordics. We have the first foot onto the German market, but we still have a lot to do. So thank you for listening, and that's that from me. Thank you.
Thank you, Eric. And to start off, I think it's good to see that the underlying organic Awardit is performing well. And I think if you adjust for the temporary revenue losses in Prämie, I think you can correct me, but that the acquired businesses are performing pretty much in line with your predictions.
Yes.
Is that correct?
Yes. So MBXP is performing in line with our predictions. And we know that it has a different seasonality than our core business has. And that's driven a lot by increased sales in Q4 and increased redemption in Q1. So that takes down naturally profitability in Q1, and especially in January and February. So we see that the business is back to profitability in March and April, so which follows the natural cycle of that business. In Prämie Direkt, it's delivering not fully in line with expectations, obviously because of the postponed campaigns that we have seen. And we are now working on 3 different fronts, basically, to offset that revenue loss. We are working hard to make sure that these campaigns are indeed actually executed later in the year. So we hope to see these campaigns that were postponed come up and being run as soon as possible, of course. But I believe that will happen not in the second quarter, but rather in the third and fourth quarter for these specific customers.
And what are the customers saying to you about those campaigns right now?
So they are saying that they need to recalibrate their spend in the campaigns and their customer acquisition costs, how they calculate the customer lifetime revenues, etc. So they need to postpone the campaigns while they are recalibrating sort of their marketing efforts. But this, they tell us, this will be done after Q2, so they can start the campaigns again after Q2 in second half of the year. So of course we're having a close dialogue with these customers to make sure this happens. But at the same time, we're also working on finding new cases and new customers, and we have a quite broad network of existing customers from before and customers that we know are prospects and should be interested. So we're working to find new campaigns, new customers to offset the loss in revenues. And we're also working to make sure that the campaigns that we have planned with customers for this quarter and the coming ones are as big as possible. So looking at how we can add volumes to campaigns that are already planned. And we believe that if all this can happen, we will be on a strong sort of Q3 path. So, but we're following up now closely, of course, to make sure that we get these revenues in.
All right. And turning to the future, I know you have ambitious plans for both Germany and other parts of Europe. And now with the Premiere, you have a foothold in that region. So how do you plan to expand on that initial foothold you have in Germany right now, both organically and also through potential new M&A?
So in Germany today, it's quite important to state that Premiere Direct is working mostly on the fulfillment side of loyalty programs. So they are not running to the same extent that we are in the old sort of Awardit business, the full-scale loyalty programs, including the earn modules and the full technical integration with customers. So they are more focused on the fulfillment side, even if they have some components that are also on the earn module side. So obviously we see a very strong case in growing sort of the services offered by Premiere Direct, where Premiere Direct today on quite a lot of clients and customers, they work with partners that give the services to the customers that we can do from Awardit. So obviously we want to be the ones providing these services in the future. And that we can do either by taking what we have, our systems, our know-how from the existing business and adapt that to the German market and providing that to the Premiere Direct customers and to others, of course, and grow organically with our systems that we have. Or we could potentially look at acquisitions to acquire these kind of businesses in the German or DACH region that we can then add to the Premiere Direct business, which would be perhaps a faster way into the market. But that would need an acquisition, of course, of those kind of partners. But in Germany, the market, in Germany and DACH, the market is quite fragmented. So we have a number of players. We have fulfillment players in the same size of Premiere Direct as well. We also have technical suppliers that are in the same size of Premiere Direct or smaller. So we don't have the same kind of full scope supplier as we have here with us in the Nordics. So we believe we have a very strong possibility to add that to the German market, either through our organic growth with our systems into the market, adding know-how and scope to Premiere, or by acquisitions.
Great, sounds good. And I guess that you believe that you have technical expertise that triumph those competitors in Germany. Otherwise, you wouldn't bring your own platform overseas. Is that true too?
So I believe we have a strong technical expertise and strong proprietary platforms in our ownership. So I mean, using them would be one possible way for sure. And then I think, of course, it would be a longer runway into customer cases compared to maybe acquiring a business that has existing integrations with customers. But it's just two different ways of really approaching the market. But no matter what, our strength lies in supplying full scope loyalty programs and gift card programs. So we don't see that, growing Premiere Direct in the existing model that it's using now is of course a focus that we have here and now. But to improve over time the margins of the business, the level of recurring revenues from the business, we will need to add other aspects to it as well. So for sure, that's something that we are looking into and planning for the future.
Great. Thank you, Eric. I think that's all we had time for. And thank you as well, the audience. See you next time.
Thank you.